Hello everyone, welcome to Wealth Growth Club. Today, let's look at BSE Ltd, the famous Bombay Stock Exchange. This is the company at the heart of India's share market, helping millions of trades happen every day. Let's see how their business has grown and how those numbers stack up for investors. Let's start with sales. Back in 2014, BSE made 485 crores in sales. Now, sales have jumped all the way to 3,443 crores in the latest period. This is 7 times bigger than 10 years ago. For the latest year, sales grew by 10.55% compared to the previous year. The sales growth rate isn't the same every year. For example, from March 2023 to March 2024, sales went from 925 crores to 1568 crores, which is 70% increase. Over the past 10 years, compounded sales growth is 19% per year, and for the past 5 years, it's 40% per year. For the past 3 years, 56% per year. So, growth has picked up a lot recently. Now, we can see how much does it cost to run BSE. Expenses in March 2014 were 240 crores, growing to 1585 crores. Manufacturing costs are small, only 2% to 12% of expenses each year. Employee costs have usually been a moderate part of expenses, between 9% and 25% over the years. And most recently, employee cost is just 116 crores out of 1585 crores, which is about 7%. The largest chunk is other cost, which often make up over 40% of expenses. So BSE keeps employee cost steady and spends most of its money on running and upgrading its systems, infrastructure, and day-to-day operations. This is typical for a modern stock exchange, where maintaining secure, reliable, and fast trading platforms is very important. In 2014, BSE had an operating profit of 245 crores. In the latest, operating profit is up to 1858 crores. That is a 54% operating margin in the latest period. For every 100 rupees BSE earns, 54 rupees is left after expenses. Very strong. Other income like investments or side businesses is 375 crores in the latest period. Interest expense basically zero. BSE carries no debt. Depreciation, setting aside for asset wear and tear, 116 crores. Net profit jumped from 160 crores in 2014 to 1596 crores in the latest 12 months. EPS rose from 1.45 rupees to 39.4 rupees. So, shareholders have seen big improvements. And BSE has a history of solid dividends. Payout rates range from 31% up to 78% of profits in some years. So, overall, BSE is a stable company, with sales and profits rising strongly in recent years. Expenses have grown, especially with more employees and operating costs, but their high profit margin mean BSE turns a big part of revenue into actual profit. It pays regular dividends and works with zero debt. Its return on equity and capital employed are excellent. For investors, BSE looks like a well-managed, efficient business, making the most of India's growing capital markets. The stock price does look high, PE almost 60, so new investors should watch for the right entry price. But if you are looking for steady profit growth, strong profit margins, and a central role in India's market, BSE keeps delivering. If you found this breakdown helpful, subscribe for more easy finance explainers. Let me know which company you want to hear about next.